Yesterday, the federal government in the U.S. announced they will not be raising rates, which is a lot good news to a lot of homeowners, and because that means their mortgage payments will not be going up. Also, one of the reasons why they did that is that their economy is still showing signs of strength, and that's cause of concern because the Feds, what they're looking for is the economy to slow down. They want job growth to slow down, so inflation will, reduce and come under control. So even though they saw that, they didn't raise rates. The reason why, because they've raised enough times this year, and they feel that they want to still watch it play out. How does it affect the economy overall? They still have a decision to make in December. And just like Canada, December 6th, the Bank of Canada will be meeting and making their decision on their interest rate, and I don't think they'll be raising. And just like the U.S., I don't think they'll be raising in December either, but they still have that date to gauge the market and see what happens. Tomorrow, which is the first Friday of every month, the job numbers come out. And I'll be making a video about that in the next few days to let you know how that turns out. But the reason why they pay attention to that, if jobs are good, the economy is strong. If the economy is strong, inflation will go up. We discussed in many videos, the Bank of Canada, the federal government, their main concern in the U.S. and in Canada is inflation. They have to reduce it at all costs, because if inflation goes up, it destroys the entire system. So they've made it very clear their goal is 2%. It could take longer than they think to reach that goal, but they're going to do whatever they have to do to reach that goal. If they have to raise rates higher, they will. If they have to leave rates higher for longer, they will. Their main concern is inflation. Don't be fooled. There's a lot of talk in the marketplace. There's a possibility of them lowering rates mid-2024. Absolutely, that can happen. But it has to be for a reason. We have to look at the numbers. Why is it happening? Have jobs dropped off a cliff? Has the economy slowed down drastically? In the U.S., we're not seeing that yet. And in Canada, we haven't seen that because September's we got fantastic job numbers, but we know they were kind of misconstrued and misleading because it's the education area. September, everybody goes back to school. They do an immense amount of hiring for helpers and assistants, so the numbers are a little bit skewed that way. But in October, tomorrow when the job numbers come out, they'll be a lot more clear. And if those job numbers are really strong, then the chances of another rate hike is much higher. It's not guaranteed, but it increases the chances of that. So we'll pay attention to those numbers in the US and in Canada and kind of break down what is really causing this inflation rate. And we'll put up a chart here to look at the breakdown of it. And it's really food, shelter, health, and energy. So energy costs, we know, it drives the entire world. Transportation drives the world economy. So if we look at food costs have gone up because transportation from the farm to get to the grocery stores or get to the depots where they handle all the food supply, it costs a lot of money. Those costs have gone up, so that has to be reflected in the price of what they sell the product for. So, and also this carbon tax. The federal government in Canada is putting on a tax to help our environment. It's on food, it's on the farmers. So that has cause the price of food to go up. Shelter is our main concern because we talk about the real estate market. Now, the Canadian government and the US Feds, their shelter cost is very, very high. Why? Because they raised the rates. Everybody's payments skyrocketed. If your payment for your mortgage is so much higher now, then obviously your shelter cost has gone up drastically. So, and then it'll go right into the rental market. If a homeowner is renting his home, his mortgage payment went up so much. When he rents that house out, he's going to charge much higher for the rent to carry it, or he's going to be forced to sell it. So they raised the rates, shelter costs skyrocketed. If they lower the rates, shelter cost is not going to come down. What's going to happen is the real estate market is going to take off again, and it's going to cause more inflation. So the Canadian government's really stuck. So my opinion is they're going to keep rates at this level, possibly raise them a little bit more. I don't think they'll raise them much higher, but they're going to keep them here as long as they have to. They don't care. They act like they care about these renewals. We're getting 100,000 renewals every single month across Canada. And it's safe to say on the conservative level, at least 25,000 of those mortgages are in Ontario. And if people are renewing 25,000 homes every single month into these higher rates and their payments are going higher and higher, it's going to have an effect. People are not going to be able to, some of them are not going to be able to hold it, some of them can. The ones who cannot afford it are going to be forced to list and sell. That's going to push the market down. That's going to push home prices down. I believe the Canadian government wants to do that. One has to give. The rates go down or home prices go down. And I think they have chosen for home prices to go down. And that's what they're going to do to cause shelter inflation to go back down to the levels of 2%. which they're more comfortable with. And so be prepared for that. They can say a lot of things in the marketplace, but if the numbers don't make sense, it's not going to happen. So we're having a massive renewal influx in the marketplace. Tomorrow the job numbers come out, which is really, really important, because if the job numbers are not so strong, that is a good sign. And that means the rates will probably not go up in December. If the job numbers are really, really good, there's a good chance in December or early next year when they meet in January and February, they're going to be raising rates. They have no choice. They have to make this economy calm down. Another thing to look out for is the global issues going on right now. We have one war going on with Ukraine and US, and we have another war breaking out that could, if it expands from that area, if it goes into other areas, into the Middle East, oil supplies will be affected, supply chains will be affected, and our fuel costs, our transportation costs, our energy costs will skyrocket. And that will put the Western nations, European nations, the entire world in a scenario of high inflation when it comes to energy costs, and then here come the rates again to get that under control. So there's a lot of factors playing into this. Right now in the GTA, we have 11,377 homes for sale in all of GTA. So that includes Halton, Peel, Durham, Toronto, and York region. So all these areas combined, we have 11,377 homes. That number is very, very high for this time of the year. Usually we have around anywhere from, I would say, 5,000 to about 7,000 listings. We have double that. And the reason is, it's this renewal nightmare that's happened. People are renewing into these higher rates. It's getting harder to hold those homes, and people are listing the homes for sale. The number we're at right now, I haven't seen it go below 11,300, and I haven't seen it go above 11,800. So we're kind of caught in this range. So one way is going to break. Either inventory is going to go lower, or it's going to go much higher. So my personal opinion, I think it's going to go a little bit higher and stay at that level. The condominiums, we have 8,789 condos for sale in all of GTA. Again, it includes all those regions: Halton, Peel, Durham, York, and Toronto. So what's going to happen with the condominiums is that they're ranging anywhere between 8,000 and 9,000 condominiums for sale at all times right now in the last 3 weeks. I do believe the condominiums are going to get hit a little bit harder and faster. We're seeing more price drops in condominiums. We're seeing people who are signing condos at a higher level and not being able to, so they're going to be forced to close on them and then list them for sale, because the higher rate they got now, they're not going to be able to afford the payment. So we're seeing a lot of turmoil in the marketplace. We're hearing a lot of noise that, hey, they might lower rates next year. The Bank of Canada has made tons of these predictions, and they have been incorrect. They'll say, we would like to do this, we foresee this, we see this, and we want this to happen. Something else happens in the economy, and they're forced to do something else. That happens to them all the time. So be very careful. The numbers are showing us that the market is trending down. The numbers are showing us that interest rates are going to stay higher for a longer period of time. They're fighting inflation. It's a massive fight. Inflation is out of control. In the chart we discussed, we've seen how high the food inflation, the shelter inflation, the health inflation, and the energy inflation is. It's going to take some work. It's going to take some time to bring it down to 2%. So prepare yourself. The likelihood of rates staying higher for longer is very, very likely. The likelihood of them lowering rates is a possibility. Absolutely, it can happen, but the likelihood is much lower. So it's, again, guys, it's Real Estate Raza. Call me anytime with your personal situation. If you're in a financial bind, it's better you call and talk about it now before you get to the last minute where you find yourself in a position you can no longer afford to pay your mortgage payment. So we'll give you some recommendations how you can talk to your bank. And if you go to talk to your bank about restructuring, call us first. We'll advise you what to say to them. It's Real Estate Raza, 416-995-7317. Again, the job numbers come out tomorrow. I will be making a video on that, probably putting it out on over the weekend, just to see how it's going to affect the interest rate decisions going into December. Until then, guys, you guys have yourself a wonderful day. Real Estate Raza, and we'll talk next time. Bye-bye.